Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Tuesday, March 15th. U.S. stocks are following the global markets sharply lower after another steep sell-off in Japan. Tokyo's Nikkei 225 plunged nearly 11% after a more than 6% decline yesterday. Another explosion at a nuclear plant has raised fears about a full-scale meltdown, and Japan's Prime Minister said that a substantial amount of radiation has already been released into the atmosphere. Now the intense selling pressure seems to be spreading to equity markets worldwide as the damage from last week's earthquake and tsunami has all but shut down the world's third largest economy. Among the biggest decliners outside Japan are Hong Kong and Germany, where the DAX 30 index is falling nearly 5%.
Here in the U.S., all three major stock averages are sharply lower. The NASDAQ composite is the worst performer, tumbling nearly 3% amid weakness in technology shares. Companies reliant on Japanese demand, including Intel, Microsoft, Apple, and Cisco Systems, are all sliding. Uranium miners are also under pressure again, as the Japanese disaster renews fears about the safety of nuclear energy. Denison Mines is slumping 13%, and Uranium Energy is tumbling 20%. Meanwhile, the Dow Industrials are off about 250 points, dragged down by a 5% drop in shares of General Electric. GE designed the reactors used at the Daiichi plant, where the explosions and radiation leak occurred.
Another effect of the Japanese disaster is a flight to safety among investors. They're selling out of riskier assets, such as crude oil, which is falling more than 3% today, and is now trading below $98 a barrel. In fact, we're seeing a broad decline in commodities, including gold. It's now dropping back below the $1,400 mark. That flight to safety is also boosting the U.S. dollar against most other major currencies, except the yen. The Japanese currency is rebounding against the dollar after yesterday's steep decline.
Despite the recent declines, energy prices are still up sharply over the past month or so. Petroleum costs jumped 3.7% in February, contributing to a bigger than expected 1.4% increase in overall import prices. Meanwhile, manufacturing activity in the New York region is growing at a faster pace this month. The report marks the fourth straight increase in the Empire State Index and its highest level since last June. But today's big economic news will come from the Federal Reserve later this afternoon. Following its policy meeting in Washington, the central bank will announce whether it's making any changes to interest rates or its $600 billion bond buying program, which is set to expire at the end of June. No changes are expected, but a vocal minority on the Fed Board of Governors fears that quantitative easing, combined with higher food and energy prices, will spread inflation throughout the economy. That's the latest from Weiss Research. Have a great trading day.